Now speaking, Nidsa McKee, Senior Associate. Citi Trends reported its first quarter 2023 earnings and held a call to discuss the results. On the call were Chief Executive Officer, David Makuen, and Chief Financial Officer, Heather Plutino. The company's earnings release was sent out at 6:45 a.m. Eastern Time and is available on the website under the Investor Relations section. During the call, forward-looking statements were made, which do not guarantee future performance and should not be relied upon. CEO David Makuen then took over the call. Now speaking, David Makuen, Chief Executive Officer. Citi Trends' first quarter fiscal 2023 earnings call reported that results were in line with previously stated guidance against a challenging macro backdrop for the low-income families they serve. Citi Trends emphasized stocking stores with more entry price points, $9.99 and under, and improving the store experience, including visual merchandising and welcoming customers by name. The buy team was successful in capturing targeted demand opportunities, particularly in Citi Mini, Easter looks, and commodities, scrubs, basics, and replenishment items for the home. Financial position remains strong with liquidity of approximately $164 million, inclusive of $89 million in cash and no borrowings on their $75 million asset-based lending facility. 4 strategic priorities are driving comp store productivity, managing inventory and maximizing margin, controlling SG&A expenses and leveraging the balance sheet, and executing technology enhancements. During the quarter, the Citi Trends Text Club added over 20,000 new members and the rebuild of the footwear business is gaining traction. Inventory dollars were down 12% from last year and in-store inventory levels were 8% higher than last year. SG&A expenses are being managed in a lean and disciplined manner and improvements are being made to the distribution centers and stores. The launch of the new ERP platform is planned for later this summer. The outlook for the fiscal year incorporates a continued challenging backdrop through the first half, followed by a modest improvement in the second half. Now speaking, Heather Plutino, Chief Financial Officer. Citi Trends reported Q1 of fiscal 2023 results in line with previously stated guidance. Total sales were $179.7 million, a decrease of 13.7% compared to the same quarter in 2022. Comp sales decreased 14.1% compared to the same quarter in 2022. Gross margin was 36.7%, or 37% as adjusted for cyber incident expenses, versus 39% in Q1 2022. SG&A expense dollars totaled approximately $71 million for the quarter, or $70 million when adjusted for cyber incident expenses, representing a 1.8% decline from Q1 2022. Operating loss was $9.5 million in the quarter, or $7.9 million as adjusted, compared to operating income of $39.7 million or $4.7 million as adjusted in Q1 2022. Net loss per share was 81 cents, or 66 cents as adjusted. Total inventory dollars at quarter end decreased 12% in Q1 2022. Total in-store inventory was up 8% compared to Q1 2022. The company revised its outlook for fiscal 2023 due to uncertainty in the market and relief for low-income families being more muted than anticipated. Total sales are expected to be in the range of negative mid-single digits to negative low single digits, while full-year EBITDA is expected to be in the range of $5 million to $20 million. Citi Trends plans to open 5 new stores and remodel 10 to 20 stores in the year, resulting in capital expenditures of $15 million to $20 million. Year-end cash balance is expected to be in the range of $85 million to $105 million. Full-year growth margin is expected to be in the high 30s and the closure of 10 to 15 underperforming stores is expected. Now speaking, David Makuen, Chief Executive Officer. Citi Trends announced 2 milestones from a corporate social responsibility perspective. The Citi Cycle program is designed to reduce environmental waste by moving end-of-season goods that have reached the end of their markdown life to a new usage opportunity in Goodwill stores. Proceeds from the sales of these goods are used to support community programs, such as Project Search in Milwaukee. Additionally, the Black History Makers program awards $10,000 to $5,000 grants to Black business owners doing exceptional work, with 30 businesses receiving grants across the U.S. in the last 3 years. Craig-Hallum Capital Group analyst Jeremy Hamblin inquired, "What trends have you seen quarter to date in terms of conversions and units per transaction?" Heather Plutino replied, "Jeremy, thanks for the question. Q1 was characterized by February and April performing similarly to each other, while March was softer. April was within our prior guidance but at the lower end of that range. This trend has continued into May. We are seeing some positive signs in terms of customer reception of spring/summer products, resulting in strong conversion. However, traffic and basket size remain under pressure due to economic pressures on our customers. They are being very selective about what they put in their baskets. Craig-Hallum Capital Group analyst Jeremy Hamblin inquired, "Can you provide some insight into how the inventory management and freight impacts gross margins and what your expectations are for those dynamics year over year?" David Makuen replied, "Jeremy, thanks for the question. Our fourth quarter call revealed in-stock levels were not meeting our expectations for certain targeted zip codes. We proactively increased inventory in April to prepare for Q2 demand, with a focus on essential items such as health and beauty. This decision has been validated. Sales have responded positively to the increased inventory. Now I'll hand it over to Heather to address your freight question." Heather Plutino replied, "In response to the margin question, we saw an adjusted margin decrease of 200 basis points, driven by a 60% freight, 40% markdown split. We took action in the quarter with higher cost modes of transport and increased markdowns to make sure we had a clean inventory for Q2. Our move team has been working hard to bring down freight expenses, and that should help moderate expenses throughout the year so we can hold our guidance on margin in the high 30s. Craig-Hallum Capital Group analyst Jeremy Hamblin inquired, "Have you seen any lasting effects of the cyber attack on profitability or reputational damage?" David Makuen replied, "Thanks, Jeremy. Absolutely not, no reputational damage was incurred. We experienced an internally focused issue that had no impact on our stores or customers. The team conducted all the necessary recovery exercises and were confident in our security going forward. We've moved on from this situation." Craig-Hallum Capital Group analyst Jeremy Hamblin inquired, "How does the company plan to deploy its capital, particularly with regard to buybacks and potential store openings, in light of the current uncertain macro environment?" Heather Plutino replied, "In response to Jeremy's question about CapEx guidance for the year, I believe it makes sense to reduce the number of new stores and remodels. This allows us to focus our resources on strategic initiatives while preserving cash. Share repurchase is not off the table, but not now as we prioritize investing in the business and preserving cash. Our board of directors is actively engaged in a conversation about capital allocation that is focused on what's best for the long term." Craig-Hallum Capital Group analyst Jeremy Hamblin inquired, "Can you provide more insight into the direction of the company and potential for growth in the coming quarter?" Telsey Advisory Group analyst Dana Telsey inquired, "How have the performance of CTX stores compared to the base? Is there any difference between remodeled stores? What is the pricing distribution across categories and newness? What are the next levers for trend development?" David Makuen replied, "Thanks for your questions, Dana. Our CTX stores are performing well, with mid to high single-digit differentials compared to the rest of our chain. Our focus on pricing has been really effective. 85% of beauty items are under $10 and 55 to 60% of apparel items are similarly priced. We've been mindful of customer needs in this economy, and we're seeing a thank you from them for lower price points. Additionally, our team has done a great job recognizing what trends will be successful, such as for back-to-school and holiday seasons, and ensuring that they come in and exit at the right time." Telsey Advisory Group analyst Dana Telsey inquired, "Heather, could you discuss the expected performance in the second half of the year given consumer pressures?" Heather Plutino replied, "Thanks, Dana. Our conversation from last quarter still holds. We're seeing a more moderate improvement on the top line throughout the year compared to last quarter." Heather Plutino replied, "SG&A will stay steady and margins will start to increase as the year progresses. As we discussed last quarter, given challenging market conditions, we made the decision to adjust our guidance downwards." Telsey Advisory Group analyst Dana Telsey inquired, "What is the impact of the decrease in retail sales on your price point?" Heather Plutino replied, "Shrink is an important issue for us at Citi Trends. We're monitoring and managing it in a cross-functional way to ensure the safety of our associates and customers. Unfortunately, the number of instances of theft have increased recently. We're taking steps to put processes in place to more closely monitor and manage it, though the impact on our margins is still concerning." The Benchmark Company analyst John Lawrence inquired, "David, what trends are you seeing in the vendor base when it comes to inventory? How are you increasing the speed of getting new and fresh products? Are you seeing any challenges with apparel in the marketplace?" David Makuen replied, "John, our vendor partners have been an invaluable asset. They've provided us with quality products and services despite the difficult times. For example, we've seen a decrease in retail sales which has impacted them as well. We're proactively seeking out new vendors that can keep up with current trends and offer cost-efficient solutions. Additionally, we're ahead of the curve for back-to-school and holiday season orders. Our team is well equipped to read the market and adjust accordingly. The benchmark company analyst John Lawrence inquired, "Can you provide more detail on the ERP system and how it will impact productivity?" David Makuen replied, "We are on track to deliver a new platform at the end of summer that will revolutionize how we plan and allocate inventory, manage our finance operations, and leverage data and analytics across all areas of the organization. This platform will replace an antiquated system with a modern, cloud-based interface featuring sophisticated algorithms to ensure the right goods are sent to the right stores at the right time. The benefits won't be as significant this year, but we anticipate greater returns in 24 and 25. David Makuen replied, "Thanks, Kelly. Have a great Memorial Day weekend." Regarding the question, we have seen an increase in our quarterly earnings that was unexpected and is very encouraging. We attribute this success to our customer-focused strategy and the strong performance of our new products.